Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for May 28th, 2023. Hope you guys and gals are having a great weekend. Matter of fact, it's an extended weekend for most of us. Here in the US, we're celebrating Memorial Day. If you're in other parts of Europe, you might be celebrating Whit Monday, which I believe is Holy Monday, if I'm not mistaken, or it's a summer holiday in the UK. Anyway, enjoy the long weekend, and we can enjoy it a little bit further and a little bit more because we don't have to worry about Congress coming back and voting on a debt ceiling, because Janet Yellen came out over the weekend and she said that the X date, that old X date, has been moved to Monday the 5th of June instead of the 1st of June. So that gives our legislators here in the United States a little bit of extra time to debate what's happening with the debt ceiling. So good news is we can relax, drink a few beers, enjoy ourselves, or if that's your thing. Anyway, we're going to get started with analysis here shortly. I just want to say though, if you haven't subscribed to the channel, subscribe to the channel. Give a thumbs up if you think that these videos are beneficial to you. We've been doing them for about 7-8 years now, every single weekend. So if you think they're great for helping you prepare for the week, give us a thumbs up, and also jump in the comments down below. I'm going to mess things. There are things that are going to be important that I might have overseen, or maybe you have a different opinion than I do on the markets. Hey, that's what makes a market. So jump down in the comments below. Let me know what your thoughts are, and it helps out with the channel too when you do that. So I'm going to go ahead and get to the analysis now. We could go through the live charts here, obviously with Forex Analytics. I'm not going to do that because I'm going to expand this screen completely. This way, you guys can get a really good view of the markets, and we're going to get started talking about what the heck's happening and what we can look forward to next week. So let's start with the calendar. First of all, on Tuesday, we have U.S. consumer confidence. Now let's talk about the dollar index and the rally that has continued with the dollar. The dollar looks like we are going to try to test that 200-day moving average, which comes up right here around 105.25, 105.30. That seems very logical. If you look at relative strength, we are overbought or getting towards overbought. But just because you become overbought doesn't mean you can't become more overbought. So that's something that, as traders, we have to pay attention to. It's not like oh my gosh, I'm overbought, so I can't get long anymore. No, that's not necessarily the case. We can become more overbought, and the dollar index looks like it could reach even further. Now, there's a few charts that will support that. Actually, almost every chart out there that's going to support it, which we're going to get into. But with consumer confidence, U.S. consumer confidence, this could really end up moving the dollar. Now we have a lot of other data that's coming out this week that I think is going to be more impactful, like the jobs report, which we'll talk about. But with the dollar index itself, I mean, we could theoretically reach up to this 38% retracement. Can you see that 38% retracement? If you can't, let me go ahead and make sure that you can see it a little bit better. That comes in right here, this thicker blue line at 105.75. Now we trade at 103.82. So if you think about how far that is in the dollar index and where that could take other currencies like the euro, that could probably take us down towards 105. It looks all possible, especially if data continues to surprise to the upside. Now, you might think, well, the data is starting to roll over a little bit, but we have been saying that it's starting to roll over for the last couple months, really, but it's still beats expectations. Even though expectations are coming down, we still are beating expectations more so than what we thought, especially with the labor data, which we're going to talk about here in a second. So with that being said, dollar index looks like it could continue to extend. Now, if you want to talk about the euro, we have also Tuesday morning, even before the U.S. consumer confidence, we have the Spanish CPI. Now let's talk technicals with the euro really quick, and we're gonna zoom in. But matter of fact, we should first zoom out. So one of the things that has really bugged me about trying to buy the euro and try to get on the long side, which I have done so this last week, unsuccessfully, mind you. You can notice we're at the 618 retracement. I don't give my trades a lot of wiggle room when you're going counter trend, and especially in this environment with everything that's happening with the US debt ceiling. So as a result, I'm just not sticking around long. But you'll notice we're at a 618 retracement, and we completed a flag pattern, completed the double top, triple top, and we got to the 618. So naturally, what you're going to think is, oh, we completed a pattern, so we got to see a reversal. That happens less often than you think. There are people that think, oh, a pattern has played out, so I need to go ahead and reverse it. Should probably go read some technical analysis books. You try to go get confluence, but just because a pattern's over doesn't mean you can't see a continuation. So in this case, that's exactly what we're seeing. We're seeing a continuation lower. Now, we got a confluence at around the 618 retracement, which makes sense, but are we oversold yet in the euro? No, we're not. So that's why you have to be extra careful. And to be honest, and to be frank with you guys, this dollar index still looks explosive. I know we've been looking for a dollar bottom, catching people wrong-footed, but it doesn't look like it wants to let up. And if you think about an extension of the debt ceiling debate or conversation or, negotiations, if you will, that probably will lend to several more days of dollar buying because people are trying to buy ahead of the news. So if the X date just got extended from the 1st to the 5th, that's another 4 or 5 days of possible speculation that the U.S. is going to pass a debt ceiling deal in one way, shape, or form. So therefore, the dollar may continue to grind higher for the next week, week and a half. So with that being said, look at the euro dollar. We do have the Spanish CPI a little bit. Or on Tuesday morning, is what I meant to say. Now, Spanish CPI it has been a little bit more volatile than other countries, so it's something to pay attention to. You know what else is happening on Tuesday? Well, it's actually Wednesday morning, but late Tuesday is you're going to have Chinese PMIs. You have, and with Chinese PMIs, it's been very influential to the Aussie dollar. And notice how the Aussie finally broke the support. But what's more important about what the Aussie has done is we've closed below the 618 retracement and handedly. And even the rally back on Thursday and Friday could not take back the 65.50, 65.60 level breakdown point. That should be noted, and not in a bullish way. It should be noted in a bearish way. We could not get back above that 618 retracement. So what does that tell me? Well, it tells me that there's probably more downside in the Aussie coming up for several reasons too. I mean, whether you're talking about Chinese reopening that fell flat on its face, or if you're talking about potential risk aversion, from current levels, or if you're talking about the significant breakdown that we saw in copper. I should show you guys a chart of copper, really. I mean, copper just, really, really big breakdown here. And we got right to support. And we're bouncing from it. But you'd expect that we bounce from the 618 and this ascending trend line. But what if that breaks? What if we're at resistance right now and we roll over in copper? Well, guess what's going to get taken with it? The Aussie dollar, right? And so with Chinese data coming out this weekend, or on Tuesday night, Wednesday morning, you got to keep an eye on that. We also have on Wednesday, really early, well, it's actually really early in the morning for Europe. It's late at night for me. We have German CPI. So keep that in mind that the market is looking for inflation to continue to drop, not only in Germany, but we're seeing it globally, right? Expectations are coming down. Disinflationary forces are taking hold. German CPI is going to be possibly a market mover early Wednesday morning. We also have Canadian GDP. Now, Canadian GDP is going to be interesting because the dollar CAD, and if you look at the daily chart here, we rallied right into resistance, really, really critical resistance here. You can see that right here. Now this resistance, the reason why it's so critical, we stopped there, but you can see in the daily charts we stopped there a couple of different times. It's horizontal resistance, and we start breaking above 136.60, and we should challenge this Gartley pattern, reversal point that we've been targeting at 137.50, which is also a triangle resistance. So those levels look like they'll come into play, especially if the dollar continues to go higher and if Canadian GDP starts to show some weakness. Now, one of the other things that we have on Wednesday, we have the Beige book. Now, did you all know that the Beige book was originally called the Red book? And if it was the Red book, it probably wasn't as boring as the boring old Beige book, which I live in Scottsdale, Arizona, and everything is beige. Everything is like this brown color. But that's kind of like what we expect of the Beige book, but not really. The Beige book is going to be probably looked at and scrutinized a little bit more so now, as the Fed is very close, within a hike or two, you think, of their terminal rate where they're going to keep rates unchanged, whether it's this next month where they raise rates another quarter and they leave it, or what. We are getting close. Therefore, a lot of these regional reports like the Beige book are going to garner a lot of attention. So keep that in mind. That is going to be on Wednesday. And especially if we start to see anything out of the ordinary. And I think that's what the market's going to be looking for, especially when you're dealing with the dollar. All right. Now, the JOLTS job report is also on Wednesday. And that's going to be kind of a market mover, because the JOLTS jobs report over the last 2 months have really started to show weaker data. And, everybody's looking for when that turn in the U.S., when the U.S. Jobs report is going to be. And, especially in non-farm payroll, which is going to be on Friday. Everybody's trying to figure out when is it that we're going to start to see that weakness. Well, with the JOLTS jobs report this week, again, last two pieces of data have come in worse than expected. You got weekly unemployment claims on Thursday, which is also going to be watched very carefully. So all this employment data getting ahead of the NFP is going to be very, very important, which obviously could move the dollar as well. Now on Thursday, we do have US ADP jobs report. Now it's usually on Wednesday, but we moved it. Well, we moved it. The ADP had moved it to Thursday because of the holiday week, and so they're going to be moving that to Thursday. Thursday we have the Eurozone CPI and core and regular CPI estimates as well, and then Thursday we have unemployment claims, and then we have ISM manufacturing PMIs in the U.S., which are also going to be a big market mover. Now, Friday, we're going to have our jobs report. And the jobs report is going to be really important. The market's looking for 189,000 jobs to be created. And, when you start looking at like what they're expecting for the unemployment rate is supposed to be tick up to 3.5%. Average hourly earnings are supposed to drop. Again, those disinflationary pressures are starting to take hold. So, the market won't just be looking at the headline number. We're going to be looking at what's happening with, unemployment rate, average hourly earnings, and then we're going to just have to factor all that in. Now, when you come to the charts and you go to the dollar index, you're like, okay, well, we closed above the 618. We're nearing the 105, the 200-day moving average, 105.50, horizontal resistance. It's all going to be really, really big resistance, especially being so U.S. data heavy going into this week. But really, when you talk currencies, I want to focus more on the U.S. dollar, Japanese yen. Now, the reason why I want to focus on the U.S. dollar, Japanese yen is because I've traded this on both sides of the market over the last couple of weeks. I've traded it on the short side. I'll show you right here. Let me grab my brush. Traded on the short side as we were approaching this resistance. I turned around and went long, played the breakout pretty aggressively. Then I started getting short recently, just over the course of the last couple of days. But you know what? This dollar yen looks like it wants to extend. And, sometimes when you're trading the markets, you gotta say if I can't beat them, join them. right? And this is one of those situations where we're seeing this rally in the US dollar Japanese yen, and I had been targeting up at 142, 143. Most people know this because we have this, Gartley pattern setting up. Whoops, not that far. Right here. This is kind of what I've been targeting recently. So, if we get a pullback towards 140, I think between 140 and 139, really going to be supportive of the dollar yen. When we know it turns around, it's going to be down below 138. Below 138 is where things get a little bit bearish here in the dollar yen. But the reason why I'm telling you this is because if we have a few more days of negotiations, and we all know that eventually the debt ceiling is going to get raised. It just has to, right? So anyway, it has to get raised, right? So there might be some volatility, but overall we should end up targeting about 142, 142.50. Now that extension also, leads a couple of different ways. It's 161% extension of this last big leg lower when we were anticipating UEDA to come in and take the helm of the BOJ, and him not acting, has taken us higher. So this all seems like a very logical area for the dollar yen to pivot. So in the meantime, any dips will probably be bought. And as we get towards 142.5 to 143, we should start to see some selling. And maybe that'll coincide with debt ceiling, coming to a close, meaning we raise the debt ceiling, or maybe we don't. And the dollar really starts to get sold. Also, will BOJ's UEDA maybe change his tone this month as we get closer to the BOJ meeting? So it seems all very logical that we could reach for these levels. And that's why, even though we're overbought, as you can see on the daily charts, we can become way more overbought than where we're at right now. So just keep that in mind. Now, there's other yen pairs that are moving too, but before I get to those, I want to talk a little bit about other drivers of the US dollar Japanese yen. If you take a look at the 10-year yields, you'll notice that yields are breaking higher as well. You'll also notice that gold is breaking down. All of this confirms, with gold moving lower, yields moving higher, that the dollar yen should continue higher as well. The biggest issue that I have, though, is a couple of things. Well, there's two issues that I have with the dollar yen right now. First one is the DSI actually I have three issues. So before I get into those three issues, let me just say, if you're enjoying this video, make sure you give us a thumbs up, subscribe to the channel down below, comment if there's something else that I missed here, just comment down below. Okay. All right. So, three issues. Daily sentiment index for, let me get to it really quick. For the yen is extreme. In fact, I don't think did I upload on Fridays? But you can see where we're already in extremes. This is Thursday, so the most recent data, I'll tell you what that is. Let me just pull it up on a different screen here. You can see yen DSI is at 10. Matter of fact, I think we were below that on Friday. I'll have to check again. But anyway, we're extreme bearish sentiment. When you're extreme bearish sentiment, you're getting close to a top. Whether it's here, whether it's here, that's one big issue. The other big issue is if you take a look at the Nikkei. And if you look at the Nikkei, let's just pull it up on, we'll just pull it up on the CFD here. This is Trading View CFD. You'll notice that we challenged these highs and we're basically struggling right at the highs. So that's another big issue. And then if you look at the US 10-year yield, just really quick, you'll notice here on the 10-year yield, we're starting to see some divergence intraday. So those are some of the things that are just, you know, when I look at the dollar yen, I'm like, yeah, I could go higher. The question is, how much higher can it go, especially if the Nikkei is stalling here? So we're going to have to see a continued follow through with the Nikkei. You know, you're looking at DSI's divergent on relative strength. So you wonder, you know what? Although I think the dollar yen goes higher, maybe this isn't the place to be buying the dollar yen. Maybe a dip back down towards 139 or 140 is going to give you a better, more optimum entry point at some point this next week. And I think that's the way you have to look to play the US dollar, Japanese yen. But I also want to focus on other yen pairs. Like let's look at the euro yen. You know, if you haven't seen the euro yen, we closed at the strongest levels of the week and near these recent highs and in breakout territory. Look at the sterling yen. We're in breakout territory. We closed at the highs. The Aussie yen, even the beleaguered Aussie yen, is once again nearing the 200-day moving average. Then you look at like Canadian yen. Canadian yen closed in breakout territory too. You know, and it looks like the Canadian yen can continue higher. The Kiwi yen, I mean, that thing got beat up this week, but we can't even get back below the 200-day moving average. That's because, you know, a little bit of a change in thinking what the RBNZ was going to do next, you know, cut versus continue to raise. So that's the other thing that was weighing on the New Zealand yen. But as you can see, these yen pairs are either at support or in breakout territory. So got to keep that in mind when you're playing the dollar yen. Again, my preferred trade is just standing aside and waiting, standing aside and waiting for a reversal here. That'd actually be the preferred method. But I know some of you, myself included, hey, if we can buy a pullback and look for new highs, and that new high will probably give us a relative strength that maybe wasn't as strong, and then we can start looking for reversals there. I hope that all made sense to you guys and gals. Now, a few other things I need to talk about, especially when talking about the dollar. And I'm sorry, I've been pretty currency market heavy thus far. You know, I know I've mentioned gold, which we'll talk about gold here in a second. But I gotta talk about the euro. The euro is flirting with, you know, a pretty big breakdown. I mean, you know, if the euro really starts breaking below, let's call it 107, we could really see, you know, some air come out of the euro. There's a lot of people that are positioned long the euro. A lot of people are positioned short the dollar still. They believe in long-term dollar bearishness. But there's nothing better to change minds in the market than price action. You know what I'm saying? There are so many dollar bears out there, so many euro bulls. One way to reverse that, just get price to go the other direction. And you're going to see sentiment change quite rapidly. Anyway, the other big development, in my opinion, is the big breakdown in the Aussie and the Kiwi. We've broken some really critical supports here. You start looking at the cable. Hell, if the cable starts getting below 125.60, it's going to be pretty bearish, right? So there's a few of those things happening with the dollar. So, you know, really quick, let's take a look at the S&P. And the reason why I need to talk about the S&P is obviously we closed below 4,200 or above 4,200, excuse me. Now, because we're above 4,200, you got to start looking at what the upside targets are going to be. Like, my opinion will be that the upside target is going to be 4,300. That's just from a simple extension, 127% extension here. You can see that the 38% retracement is the shallow retracement. Well, the 161% extension takes us to 4275, right? Then you look at the long term, and I'm going to delete this as soon as I draw it. You can see the long-term 618 retracement comes in at 4316. So doesn't it seem logical? I know we've talked a lot about this on our daily shows, but well, I'm here. If you guys don't know how to log into our daily shows, go to forexanalytics.com. Go to where it says webinars. You can see it right here, right there, right where it says webinars. We have 2 free webinars every day. The Flow Show that's in European hours. I'm sleeping at that point. And then we have our Face show. We have great interviews. Dale Pinkert brings in some of the best, brightest financial minds around. And our whole team gets to give you our updated thoughts every single day. So make sure you register and get involved. All right. Now, going back to what I was just saying about the S&P, the thing about the S&P is, if you've been listening to the daily shows, you know that we can reach very easily for the 4,300 level. And especially on this breakout above 4,200, it seems possible. Do you know why it seems possible? Well, take a look at the NZDUSD. The NZDUSD is ripping. We are breaking out. Yes, right now, it's all the big cap names. Sure, okay. I hear what you're saying. It's all Microsoft. It's all Apple. So what are you going to complain about it? Are you going to say that it's rigged? Of course it's rigged. But you just have to know how to play the game. Right now, that's what's ripping. So go with it until it's over. You know, at some point it's going to be over. It's going to get ugly when it's over, but ain't right now. Ain't this moment. So if you start looking at, since we did break out to the upside of this wedge, you can see how cleanly it held. That means the upper end of this channel is more than likely where the next target is. Now, the upper end of that channel, if you think about it, could be at the 78% retracement. And this looks like an explosive move, guys and gals. Imagine if we start breaking above these highs. I mean, you know, relative strength is overbought, but can we get more overbought? Do you think it's possible? It's always possible to become more overbought. Look at where relative strength was way back here in 2018. We got a lot of distance to go if that rally is to continue. So we do have to adhere to the fact that we are at the 618, but you know, it's a key fib level. Almost universally when we get there, I start fading, but you know, this is one of those situations where we have maybe another week and a half of negotiations and optimism that at some point the U.S. government is going to come to this debt ceiling resolution, and we're going to just continue to buy until you get the buy the rumor, sell the news type of event. Okay, I'm going to leave you with one last bonus to talk about. Now, before I do that, let me just mention this. If you guys haven't checked out Forex Analytics, make sure you do so. It's only $1 for 10 days. You get all these great platform. You get inside of our chat room. I showed you what our chat rooms look like. You can get in there, communicate with myself, the rest of the team, other traders, all like-minded people. And also, if you haven't had a chance to check out the trader funding program, check it out, because you can learn how to trade our money, not risk your own money, and you can get paid up to 90% of the profits. We start you off at 75, but you can upgrade it to 90% of the profits. If you want to learn more about it, just click on the trader funding program down below. And if you think that it's all stacked against you, you have unlimited time to make 10% and not lose a maximum of 6%. I did it when I did an assessment when the rules were stricter, more strict. Now they're lax, more lax. So check it out. You can qualify, see if you can qualify for a $25,000 account all the way up to $1 million of our money. So make sure you check out the Trader Funding Program. There's a link down below. And also there's a link to the video, and I share with you how I passed an assessment myself, even as my family was going through some hardships, like stuck in the hospital for weeks at a time. So check it out. Okay, back to it. The last bonus thing I wanted to show you guys and gals today. Let's talk a little bit about the US dollar South African rand. You know, I've played this one on the long side. I bought a little bit at the end of the week. Why did I buy a little bit at the end of the week? Because we closed out in breakout territory and at all-time highs. And, you know, it's interesting. If you don't think we can go higher, We are going into the winter time of South Africa. And I'm going to read this to you from Reuters. This is Reuters from last week, but if you don't think it's a serious situation in South Africa, let's just talk about it for a second. This comes from Reuters. Let me read you this part. Eskom, which has not gone beyond state, and that's their power company, whatever, has not gone beyond stage 6 power cuts, which requires 6,000 megawatts to be shed from the national grid. This winter, it may move to stage 8, Schlepp said. Now, stage 8, which would require up to 8,000 megawatts to be shed, translating to 16 hours of outages in a 32-hour cycle. Stage 8 is just one scenario that Eskom is preparing for if its interventions are not effective. This is what the representative said, explaining that the power cuts are necessary in order to avoid a grid collapse. The alternative, which is a blackout, is really a nightmare scenario because it's an uncontrolled situation where the whole country loses supply, said Schleppers. The likelihood of this is very low, he also added. Power cuts have had a severe impact in South Africa's economy, reducing GDP by about 5% in 2022, Eskom said. What happens if South Africa loses power and they go into an absolute blackout? What happens then? If you don't think it's a serious situation in South Africa, you should do a little bit of research. Anyway, guys, gals, I want to say thank you so much for spending your time with me. I know it's a long weekend. This is a very valuable time for you, and you're spending with your family and friends. So I understand that and I appreciate that. So I'm going to give you a big thumbs up for spending your time with me this weekend. Have a great, safe weekend. I'll catch you Tuesday morning on the F.A.C.E show. Talk to you then. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.